Hello friends, today we discuss about financial accounting steps. The process of identifying and recording, summarizing, analyzing an entity's financial transactions and reporting them in financial accounting system and statements called financial accounting. Accounting is like big tree. Financial accounting, managerial accounting, tax accounting, audit accounting, bookkeeping, and etc. etc. comes like it is like a banana tree, big tree, and these are the branches of accounting. First step in financial transactions is identifying of transactions, and second is general entry, record of all financial transactions. JV general vouchers contains serial numbers, date of transaction, debit credit amounts, expenses, revenue. Core principle is business owns is equal to business owes. Business owns account is equal to business owes. Assets equal to liabilities for third parties plus owner equity. Liabilities for third parties plus owner equity is equal to assets. General ledger is complete collection of record of JV general entries. Revenue is equal to expenses plus dividend is part of owner's equity. Ledgers example cash ledger, accounts receivable ledger, inventory ledger, prepaid expenses ledger, property ledger, plant and machinery equipment ledger, account payable ledger, salaries payable and other payable account ledgers, accrued expenses ledger, long term loan, owner equity ledger, retained earnings ledger, subscription of revenue, advertising revenue, sales account ledger, overhead accounts ledger, interest expenses ledger, tax expenses ledger, etc. These are the general ledgers, complete collection of record of JVs. And step 4 is unadjusted trial balance in the month or year end. Step 4 closing. Books closing is all unadjusted balances of ledgers accounting entries at the end of the year bring in line with accrual method of accounting. Revenue is its errand expenses are recorded as they are incurred. Best example is your end 1st March year opening year on 31st March balance bank recording revenue is suppose 1 lakh, errand revenue up to December is 75,000, end of the financial year 31st March unadjusted balance subscription of revenue debit is 25,000. This is the simple method. Deferred revenue, that is called deferred revenue. Credit is showing on your books 25,000. Unearned subscription revenue rupees 25,000, still it is liability account. In on year ending need to post some closing entries calls JV general vouchers that transfers balances from temporary account to permanent account in balance sheet. 31st subscription of revenue debit is 25,000. Cost of goods sold